Okay, why these financial statements are prepared? Let's look at the framework of accounting and the accounting standards. Why these statements are prepared? There are three main three main objectives. One is to know what is the financial position of the company or an entity or an organization. Second is what is the performance of the company, and the third is what is the change in financial position. So in order to know the financial position of the company, a balance sheet is prepared which says that okay, the company has these many assets and the company has these many liabilities. In order to know the performance, a statement of profit and loss is prepared which says that okay, company has this much of sales, this much of purchase, and this much of expenses, and the profit are coming out of it. What is the change in the financial position? Through cash flow statement, you will know that okay, opening cash and bank balance was this much, these many activities have taken place, and closing balance is this much. Why do we make these three statements? Financial position on a particular date, 31st of March, what was my asset, what was this company's assets, what were the liabilities. Performance is for a period. For the year ended on 31st March, during that year, how much was the sale, how much was the purchase, how much were the expenses, and the profit, which is performance. And similarly, changes in financial position. Now, the framework of accounting says that all these together will be called financial statements, and they are made in order to help user taking a decision. User doesn't mean only the management. User doesn't mean only the bankers, only the investors. It can be anyone. There can be internal users, there can be external users. Internal users can be okay, as a management, I want to know how much is my profit and how much are my liabilities and how much are my assets. I am officer of the company. I am auditor of the company. I need to know what are the financial statements. So I am user of the financial statement and I am an internal person. There can be external person. There can be shareholder who wants to invest in the company. They want to know how the company has performed and whether the company is a healthy company to invest in. There can be bankers who want to give money to the company and want to know whether the company is earning enough profit so that they can pay my loan and back, and they can also pay me interest. There can be customer, there can be people who want to get into joint venture with the company. They want to know whether the company is earning profits or not. So all these people, even the regulator, the tax department would like to know whether the company is paying right kind of tax or not. All these people, where will they look at? They will look at the financial statements. They will look at the balance sheet. They will look at statement of profit and loss account. They will look at the cash flow statements. And they will say that, okay, the company has enough liquidity. The company is performing good. Company's profit is increasing or it's not increasing. So how the company is performing